Hi, and thank you for watching again. I'm Trevor with Heritage Reverse Mortgage. We are reverse mortgage specialists, and we want to help you to discover the power of using a reverse mortgage to live better in retirement. Today, I want to debunk a lot of the myths that still exist about reverse mortgages. Now, a lot of these things we'll touch on were either just misconceptions that people didn't really understand, or they may be just outdated. Maybe some of these things had to do more with the old reverse mortgage than they do the current or new version of the reverse mortgage. So let's dive into the most common myths that come up about reverse mortgages. The first one is that the idea that if I do a reverse mortgage, I'm giving my home to the bank. The bank's just going to let me live there until I pass away. This is absolutely false. With a reverse mortgage, it's just like any other mortgage. You own this home. It's your home. You can stay there until you pass away or until you want to sell the home. And so with a reverse mortgage, the difference is that the mechanics are exactly like any other mortgage. You own the home, your name is on title, you're borrowing money from the bank, and you're going to be charged interest based on the interest based on the amount of money you borrow. But the big difference with the reverse mortgage is that your payment becomes optional. It means you do not have to make a monthly mortgage payment anymore. The interest will be added onto the balance of the loan, and then when you pass away or you sell the home down the road, that's when the bank will be repaid, not through the monthly mortgage payment that you've experienced through, the regular mortgages you've had in your life. And so again, this is your home. You own it. Your name is on title. You just have a mortgage lien against the home until you pay the bank back. Another myth that comes up is that the bank has the right to force you out of the home. Again, absolutely not. The requirements of a reverse mortgage, there's really two requirements. Number one, you must live in this home as your primary residence, either you or your spouse. Number two, you must pay the property expenses like taxes and insurance and HOAs. As long as you're doing those two things, this is your home, either until you pass away, you sell it, or you turn 150. And so if you make it to that milestone, you'll probably be famous and you won't have to worry about it anyway. But again, the point is that you're protected for the rest of your life with the terms of this loan. Nobody can kick you out. Other myths that come up, the idea that the heirs will be left with a big debt, also not true at all. FHA and HUD are the guarantors of these loans, meaning that with mortgage insurance, if there is a loss on your home, FHA will step in and cover those losses so that your estate and your family, your heirs, would never be held responsible if there were a loss at some point. Now, this doesn't really happen anymore. In the old days, reverse mortgages were designed badly, and the mortgage did grow faster than the home's equity. And so for a lot of people, it did. When they passed away, the home was upside down. The kids didn't inherit any equity in the home because there wasn't any left over. But nowadays, with the new reverse mortgage, things have been restructured so that we're keeping a substantial amount of equity in the home. And so for most of my clients, for example, if they have $200,000 of equity today, 20 years from now, they should still have $200,000 of equity or more, because what happens is your home's value will continue to go up, and that will offset most of the interest charges that are being added to your mortgage over time. And so again, for most people, they experience equity growth even after they stop making their monthly mortgage payment. Now, another question is whether or not you'll qualify for a reverse mortgage. And really simply, there's three basic requirements for reverse mortgages. Number one, it must be your primary residence, again, for you or your spouse. Number two, you must have enough equity in the home to meet FHA's equity reserve requirements. FHA, depending on your age and interest rates, has a set amount of equity they need to stay in the home. You can borrow everything else, but that's our priority, is that we want to make sure that there's going to be enough equity left in this home. So again, it doesn't put you or the bank in jeopardy if home values were to fall. The third requirement is that you must be at least 62 or older, you or your spouse. And plain and simple, one of you must be 62 or older. The other requirements with income and credit, yes, we do look at these things, but they're not nearly as tight or restrictive as they are on regular mortgages. And so usually we can navigate those pretty easily. A lot of people think the reverse mortgages are meant as a solution of last resort. And I hope that you don't see it this way. Yes, we've helped a lot of people who are on the verge of foreclosure or bankruptcy, and we were able to save their home and save their finances. But we try to avoid this when we can. We want to be a proactive approach to strengthening your financial plan. And so with the income you have from Social Security or your pension or 401k or whatever it is, we want to add a reverse mortgage to prolong those other debt or those other assets and incomes, so that you're not finding yourself running out of money in your late 70s or 80s. With the reverse mortgage, we're strengthening that financial profile so that you have money well into your 90s and beyond if you need it. And so again, use a reverse mortgage as a proactive planning tool and try to avoid relying on it as a last case emergency solution. One more thing that we'll touch on really quickly is the idea that you could owe more on the mortgage than the home is worth. Again, this is probably more outdated than anything. In the old days, that is kind of how these mortgages worked. Reverse mortgages tended to be larger than they should have. The bank was borrowing too much money up front, so that the mortgage grew really fast. And this often would exceed the value of the home, leaving the home upside down. Nowadays, with the changes that FHA has made, those loan amounts are reduced, but that means that we're leaving more equity in the home. And the beauty of that is, again, if you ever need to resell this home, when you pass away, we're leaving a substantial amount of money in there so that you or your family can access it down the road. And so I hope this is helpful in addressing some of these issues that you may have heard about reverse mortgages. If you or someone that you love is looking to explore this more fully, let me know. I'd be happy to go through your questions and concerns, and we can identify whether or not this is the best solution for you and your family. So call me at 435-359-9000 or email me at trevor@heritagehl.com. Hopefully I'll be talking to you soon.